Good day, traders. Stacey Burke from Stacey Burke Trading, and today talking about identifying the type of day that's setting up. So a lot of questions from traders the last few days. Not sure what you mean by best trade setups. What can you show us some examples of Playbook trade setups? And I think we've gone over some of that. We've talked about the geometry and structure and three levels of rise and fall. There are obviously session scalps, but I've talked about letting the day set up. There are days that will be a high-low, and they're perfect. And I'm talking about coming to the screen at London and New York, and sometimes in Asia, depending on the setup and the pair that you're trading, and having a thesis. And so there are going to be days that you can clearly identify structure, a high and a low, and then the market at the session timings will move to one of the extremes or outside of one of the extremes, setting up for either a reversal trade, potentially a trend trade, a breakout pullback, or you may already be in a continuation for a trend trade, or you're in a trading range. And again, identifying if you're in a trading range, knowing what size of range you're in, is it worth taking the risk on? So to emphasize something that I think is critical. Number one, it has to resonate with what you're comfortable with trading. So movement does not necessitate trading or a trade itself. It may be a trade setup for me, and it may not be a trade setup for you, and vice versa. So there are, again, traders messaging me and commenting and telling me that, this is this, I learned this from this, and this is that. And it doesn't matter. You need to know what you're looking for, and that takes time sometimes because you're going to have setups maybe that you don't trade very well, and that's something you have to come to terms with. Rather than not trading them well, why trade them at all? And that's one of the things that I've done is tried to call stuff that I don't like to trade. So I like to be able to identify a clearly defined structure and look at something and know that I can look and say, okay, I can see the high and low. The high's locked in. We're heading into the U.S. session and the New York Open. I'm looking for a sell high setup for a vertical move, and again, understanding the previous day's low, understanding what your instrument's potential is. So some of the major pairs are going to go 25 to 50 pips. The NASDAQ, S&P, gold, oil, they may go several hundred pips. It all depends on the setup. And again, that's where you need to filter out. Each day you should be able to start to look at the day as it evolves and look at the clock and understand, okay, this is setting up perfect for an opportunity in London, or maybe the London trade is going to be a scalp, but the bigger picture is setting up for a nice high of day, low of day, or a low of day, high of day opportunity. I reiterate that I'm coming to the screen and looking for something in that main hour. I don't want to trade anything else. I do not want to be trading inside of this creeping trend, chop, all this stuff. And just to reinforce, 1 minute, 15 minute, 1 hour, 4 hour. People have said to me, I don't like the 1 minute chart. Well, I don't like it in here either, but I like it when it's up here at the right time of the day. So you should be able to, again, step back and look at previous days' highs and lows. How is this setting up? Movement does not necessitate you taking a trade. There should be some very clear, textbook, perfect setups in your playbook that you know, as they're setting up, offer you very good asymmetrical risk-reward opportunity. There are going to be trend trades that are explosive moves that come out of 2 and 3 day setups. Again, we're talking about opportunities that can yield 5, maybe 10 to 1 on some instruments. We're going to see 3 levels of rise and a high of day opportunity right at the beginning of the session opens. This will often occur in the U.S. session. 3 sessions, Asia, London, New York. Are there other opportunities inside in London? Perhaps. But again, it depends on what your trading plan already has in it. And again, I talk about, I like to short. I'm more biased on the short side. But it doesn't matter. You can flip these upside down and you'll get the same opportunities going in the long direction. Understanding again the importance of previous days' highs and lows. The market does not have to reject those right off the bat. That's something that traders have been telling me. I sold it at yesterday's high and I got stopped out. You need to let the structure evolve and then wait for the high or the low to be locked in. And people will say, well, how do you know when it's locked in? Well, you'll have to study the charts and understand that. Again, timing is a big thing. Allowing the structure to evolve and then heading into the next section, the next trading session. Understanding the importance of the New York Open, the London Open. These things will all have a bearing on whether or not the pattern is complete. So as the day evolves, you can see the difference in being caught in movements inside when the market is building order flow versus at the timings, a structure that's now been completed for an explosive reversal, trend trade, whatever that may be, but asymmetrical risk reward and geometrical range expansions. So again, it doesn't matter what instrument. It's important to understand the probability of when your instrument is going to move. Again, I talked about different instruments may move better in different sessions, but that also can evolve over a 2 and 3 day setup. News catalysts, trap volume. So people have asked me, well, what's trap volume? Whenever people are caught up high or down low and the market can shift away, start to envision that anybody in the wrong direction, if this market was to collapse or go vertical or whatever that may be, is caught on the wrong side of where that market is going to move to. Example, yesterday on gold, we saw a beautiful market, third day, Wednesday trade, creeping trend down, took out the previous day's low, and the market continued to auction into the low right into the U.S. session 12 candle window for an explosive squeeze back all the way up to the previous day's breakout level. So again, paying attention to where a previous day's low or high can now act as support or resistance in the opposite direction. Trigger the previous day's low. Shorts, longer term time frame traders are in the market. Drag intraday traders lower, chasing the trend on whatever, 15 minute, 5 minute, 1 minute. Jam them in and then explode through all the low hanging fruit. But again, just stepping back and allowing the day to set up and taking a look at where are my highs, where are my lows, and then allowing them to paint or dictate, are we working one side? Do they break out? Are they continuing a move? Whatever that may be. Time of day will tell you these things. And again, just recognizing we see a larger geometrical rectangle, but also the previous day's breakout level now has volume trapped above there, and these peak formations are locking in the high of the day. We get into the U.S. window, bring it up, pump and dump, roll it over, range expansion for a large, explosive, fast move. So there are days, even though there's movement, they may not be ideal for me to be trading. I'm down low, level 3. There's lots of counter trend reversal trades, but this type of choppy price action is an automatic no for me. I just don't want to be caught trading those kind of markets. And again, another example. Clearly we can certainly step outside and still trade the outer boundaries if the timings are right. But I have zero interest really in trading a market that's in a 25 pip choppy trading range. Again, another example, lots of movement, NASDAQ, U.S. session, explosive stop hunts up and down, but this type of erratic choppy range is not what I consider ideal for myself, and I do not want to participate in those types of market conditions. I've learned these things the hard way. I have no interest in sitting through that volatility, hoping, praying, just for 50 pips. where that stress is not worth trading. Again, identifying a vertical move, trap volume above the previous day's high. They hold it up there. Triple top peak formation into the Europe Open, right at the London Open for a vertical explosive move. Trap volume up high, explosion down. Massive day, 3 levels of rise coming out of a consolidation trending situation on gold. 750 pips vertical in an explosive day. I believe this was the day that the Russia invaded the Ukraine. But we also see them lock in the high in the gap time. And then we see the pump up the beginning of the U.S. session, drop it down, pull it back up in the New York Open for a vertical move all the way back down, not only to the low of where that broke out, but through that low even further. Again, just identifying opportunities, even if you miss the move up, looking at the bigger picture and starting to paint the type of day that's setting up. So again, an example where maybe the earlier part of the day was not bad in terms of trading a trend trade, but as we get into the U.S. markets, the choppiness and that consolidation in a sideways range, for me, I have zero interest in trading that type of price action. I need to be able to come to the screen and clearly define my lower boundary, my upper boundary, and then I'm looking for something perhaps at the U.S. Open, a stop hunt high for a sell setup, or in this case we had news catalyst, reversal, 3 pushes at the low of Asia for an explosive move back up. But again, clearly defined parameters on my price action structures. So being able to recognize what is setting up potentially as messy or price action that is, even though there's movement, is not necessarily ideal for myself. And again, traders can get caught into this choppiness, guessing directions, chasing moves. This is the type of market day that will cause a trader to blow out their account. So hopefully you got value from today, traders. Start to be able to identify what your best trading days look like and then be able to filter through pairs. And if it's not there, we have ADP tonight. For example, the markets may stay in a fairly narrow range because we may see some explosive moves on the news itself. So getting caught into something that's not ideal may keep you trapped for a few hours. Again, I'm looking for price action that enables me to enter the market, control my risk. The market explodes or moves very strongly unidirectionally, and I'm out of that market hopefully in under an hour or less. Little stress, maximize the trade opportunity, shut it down, and come back the next session. Keep it simple, traders. Have a great day, and may the markets go with you.